So I'm going to start off by asking, who is Mark Groenheide?
First off, Nick, thank you for inviting me. I'm a big fan. It's a fanboy moment for myself. Since I first became aware of you almost like 10 years ago, maybe when your book
Yeah.
was originally published. And I was able to provide a nice little review on that as a quote, and I handed it subsequently to the old CEO of HDI US, Dr. Lothar Becker, who was the CEO of North America. And he enjoyed the book as well and provided a lot of nice insights. Who am I? I am a parametric enthusiast. I like to believe that I'm someone who spreads the gospel of parametric, but I'm an underwriter. Spent most of my career underwriting, did engineering line, inland marine, ocean marine, and a few other things along the way. And one of the things that I fell in love with is risk transfer for complicated or difficult topics. And I was fortunate enough to begin purchasing Parametric as a reinsurance tool when I was at HDI. And we were looking at that from a retention standpoint, because at the time we had just started doing business in America for local business. It was a relatively modest portfolio, and we just got into construction in I would say, a meaningful way. And we had areas of concentration, and it was a great tool. And then subsequently, I left that organization and went to Guide One, where I was responsible for the E&S portfolio, as well as my own MGU, which was CGA. And there we successfully transferred risk via Parametric, having 3 recoveries in the period of 18 months with the predecessor MGU paradigm to NormanMax. And that's when I became a full convert. And I understood that Parametric is the most exciting thing to happen to risk transfer in probably 100 years. And ever since BI essentially put in policies. So this has been a really great journey. 42 years old. I've now been part of the team that founded a Lloyd Syndicate as an American, which is something I'm very proud of. And I'm very fortunate that I met Brad Meyer, who is our CEO, who's an amazing entrepreneur. He started a Universal, which is Florida's largest non-governmentally owned home insurer. And it was originally started as a baseball pennant, making those baseball pennants go on the wall. And baseball went on strike in 97. So he was like, what do I do? I remember somebody told me about insurance, and he did a JUA takeout, which allowed him to create that organization. And then he was very perseverant and stuck with it until Universal became the largest non-governmentally owned homeowners carrier, which was a really amazing story. You've got us two gentlemen, Americans, know very little about London and the London market. I think we do. We bought reinsurance there. We've done certain things there, had experience underwriting on behalf of some syndicates, but never in the way that we know it now. And it was a really awesome journey, filled with a lot of things that I never would have anticipated, but it was awesome. And we got to meet these people called the Names, which are some of the most
Yep.
interesting people on earth, and that historic market. And what I'm really excited about is we represent a blue ocean for Lloyd's and really for independent agents, brokers, or whomever is involved in the industry, because we are now in the beginning stages of transferring non-transferred risk to making insurance and reinsurance more relevant and to delivering a level of customer service that people expect is in an insurance policy, but often don't get, because there's all of these things called exclusions, limitations, sublimits, etc.
Yeah.
Most people don't speak insurance. It's a really exciting thing. And again, thank you for having me. And I look forward to our conversation today.
Yeah. You've supplied a lot of information there. And I think for the audience sake, we will get into some of the technical details around Parametric. I'm still fascinated by your learning curve because, Mark, what I've seen in the marketplace is a lot of really wise senior people who've, when we think of insurance, I was just explaining this to someone outside, went for a short walk before this, bumped into an insurance person, and I said, do you know what Parametric is? And they gave me that stare. Have never heard of it. Even when they hear of it, Mark, it almost seems too good to be true. When you were at HDI, can you put some light around the use case itself? Like you said, you had concentration risk. I'm curious as to your learning curve. Like when you first heard about Parametric, I think for a lot of folks, this is too good to be true. kind of coverage. Can you walk through your learning curve and what exactly you were trying to solve that you, let's say, you couldn't solve using traditional underwriting techniques or traditional reinsurance buying?
Sure. I think everything starts with, this would be my recommendation to anyone who's younger in the insurance industry. Be inquisitive and research things yourself. I often was given advice to take the road most traveled, as it was easy to explain that to their superior, or it was easy to fit in this industry and not challenge the status quo, because deviating from that often requires an additional amount of work. And that never stuck well. I like to ask the question all the time, why are we doing this? What is it that we're trying to achieve? And what I was trying to achieve is, there's great rate in cat, no question about it. But there's a lot of years where you run into the but it. If Sandy didn't happen, we would have made money. This didn't happen, we would have made money. So I kept searching to try to find a way to level up the performance of the, but still get that rate that was required for the return on capital. Because if you go and you write, let's say, a project, because at the time I was in construction, in the middle of the Midwest, unless it's wood frame construction, you're not getting much rate. And we had a minimum requirement with respects to the kind of return on capital that we're looking for. When I say that, I mean produce an underwriting result that's favorable based on ratio that's predetermined by the organization. And so in those instances, after a lot of searching, and this before ChatGPT, because it would have been a lot easier, that had been around at the time, I stumbled upon Parametric. And so I had called all the providers of Parametric that I could, and most spoken algorithms that had PhDs from weather organizations or whatever it might be, from a university that specializes in weather, and none of it made sense. But I stumbled upon folks at New Paradigm, and I spoke to them, and they said, hey, we use these anemometers. You can log in, you can see what the wind speed is, and this is how it works. And it just made sense. It made a lot of sense. And like what you'd said, too good to be true, that was a lot of pushback that I did receive. But the contract was the contract. I read it. It was backed by a really great paper. It made sense to me. And I was fortunate enough that I could get people to sign off on that. It's not an easy process in a big organization when you're trying to get that done, but it was something that made a lot of sense. And then I met Jessica Snyder, who's an amazing human. And she was CEO of a company that did churches, which I had very little experience with, but she said, we want to go in a different direction. And we did. We very successfully grew that organization and returned it back to profitability. And during that time, I used this to balance a portfolio in kind of the reverse. I knew I had Parametric, and I knew that the Parametric would be a useful tool to surgically isolate areas of concentration. So what I did is I built a portfolio with concentration, knowing that our retention was whatever it was at the time, and buying Parametric to supplement that. And then when we went through the storms that we did, I recovered under 18 months. It worked great. And everybody else on the panel of a major university had issues with the product, form, all kinds of issues. Yet we paid quickly because we had the Parametric behind us. And it was at that point I called Brad and I said, really, partner. And I believe that, because at the time the MGHS was in the United States, this is something much bigger. We may have unlocked the future of insurance, and this is a worldwide problem because Parametric is non-discriminatory. And so what do I mean by that? We're basing this on the probability of an event. So what happens in the rest of the world? In the rest of the world, sometimes they don't have the building codes that we have in the United States. So therefore, inherently, the insurance is biased against those emerging economies. And you often see this in Latin America and the Caribbean. And then it's difficult for people to procure insurance. Well, what does everyone need? You need insurance. You can't dig a hole in the ground. You can't get financing. You can't do a multitude of things without insurance. It is the oxygen of the economy. So I get very excited about the thought that this product not only solves for so many issues, but it's also societally good, inherent. just
Yeah.
by what it is. And then that mission on top of what we were able to do, Lloyd Syndicate, which immediately gave us this amazing rating Lloyd's has. So it gets us on approved list everywhere. And it allowed us to transform what was a really great idea into a burgeoning business where we are now reinsuring some of the largest insurance organizations globally and also writing things as simple as a homeowner's policy. Because everyone is exposed to natural disaster protection gap in some way, shape, or form. And the industry, while it has softened rates, the retentions and the deductibles have maintained. And we make the impossible possible, transferring risk for things like docks in a hurricane or a seawall or a variety of other things that we do. And it's so scalable, it's so interesting. And I think it's really at the forefront of the future. And I would encourage any young person getting into the business to at least get exposure to Parametric.
Yeah.
In my mind, by 2030, every policy in the world will likely contain at least a supplement Parametric.
Yeah. I want to, for the audience sake, I love strategy. In your approach while you were at HDI, and then when you made the transition, was you thought differently. Concentration risk is generally not something that's sought after. It is the enemy of, it's the kryptonite of underwriters, right? And we fall prey to it. You took a counterintuitive approach and said, no, I don't mind it. Or even if I heard you correctly, I'm going to seek it out and then use Parametric as a strategic surgical tool to do that. To do it in the traditional way would require a lot of reinsurance, and because of the concentration risk, you don't really have that surgical tool. Theoretically, you do, but it would be very expensive for
Not
you
just
to do it that way.
also inconsistent. You look at something like an ILW,
Insurance linked ILW,
lost,
insurance loss warranty.
and you just got to hope that magic 8-ball hits whatever it's going to hit years from now. And one of the big misconceptions about concentration, it's not always bad. You can do something clever with a tower. I walked into a shop where they had a huge concentration in a particular southern state, and that wasn't going to go away. It was admitted business, couldn't non-renew it all, and they were getting okay rate. So I said, hey, let's just go find more risks here. Let's make sure our tower is appropriate in terms of if we had a major event, and let's supplement it down low for our retention, because the retention losses were the thing that likely could have killed the organization. And then let's seek out some maybe in the tail. And that's where Parametric's so great, because it can fit within any part of a reinsurance tower. It can be in the tail. It can be down low, wherever you need it. And it doesn't matter if it's just an economic loss that you suffer. What often people forget is it's very expensive to get a natural disaster team on hook when you've got a situation like a hurricane. And that can cost sometimes millions of dollars. And those things aren't covered under your treaty for a variety of reasons. Maybe it's your retention, maybe it's just a ULAE. It could be any number of things. And those types of risks can be transferred very successfully with Parametric. And what's nice about most Parametric products is they're an annual aggregate. So even if we have multiple events within 1 year, you can continue until you exhaust that, unlike certain other types of reinsurance where you've got reinstatements and other things that make play. So it's a really great tool. And you're right. I did think differently. I've always thought differently. I've stood by my convictions, whether privately or publicly, but I'm happy to do that.
Mark, I think the key element for that, you also brought up inherently, there's nothing wrong with concentration. It's just more risk, but there's potentially a lot more reward as well. And I think thinking differently is something I don't generally see in the underwriting world. I see a lot of what you described early on, which is almost like fitting in, do the thing that can be sold upwards, right, through the organization. Almost do the safe thing versus doing sometimes concentration risk can be prudent. I think of Warren Buffett and when he talks about, go ahead, put all of your eggs in one basket, but then guard that basket, right? Like there is a time and a place for concentration risk.
Yeah, there's no better example of that. And I've always really admired Berkshire Hathaway and the things that they've done. And in a small way, some of the most respected and successful organizations in the last 30 years have done that. You look at folks like RenRe, or you look at Nephila,
Yeah.
who are very successful in the space. They've taken stances that were counterintuitive at the time, but have proven very successful. And in the years where they were right, they were very right. And I think that's one of the ways that Parametric can be successful. And I've seen that. The really good brokers, the brokers you want to work with, they're doing Parametric. I
Yeah.
always find it funny. And when I go into a meeting and I'm meeting with reinsurance brokers and even insurance brokers, I'm asking them, well, how does Parametric fit into your renewal, or what are you looking to do this year in terms of addressing cat exposures? And they're reluctant, hesitant, or don't want to discuss Parametric. But then they don't understand basis risk at all, because there's all kinds of basis risk in a traditional program, whether it's exclusions or limitations, or just the fact potentially that ILW won't pay. And we've seen it time and time again. Now, some of the more progressive brokers that I think are the brokers of tomorrow, people who are going to be relevant, they're either engaging with a parametric specialist, or they themselves are becoming knowledgeable about parametric and doing a fantastic job. The broker community is really split. You have some organizations that are thoughtful and are approaching their client on every opportunity. You have some that are doing a very poor job and are not offering it to their clients. And really, I think that's probably one of the biggest E&Os out there, is someone has a big claim and then they were never offered a parametric or even spoke on parametric. I know if I was one of those risk managers, first thing I would be doing is calling Morgan and saying, hey, I wasn't even offered this. And that's one of those things that I find really strange, because it's been an available product for the better part of 15 years and now has really gone mainstream. I wrote last year that last year was the year the parametric went from the kids' table to the big table at Thanksgiving. And we're seeing it more. And there's some really great brokers out there doing some amazing work. And we're really happy to work with that.
So I think now I think this is the appropriate point in the conversation to talk about what parametric actually is. And when I was setting the agenda for you, I thought an interesting way of trying to do this is, Mark, let's put your sales pitch cap on. You're sitting around the mahogany table. Let's say it's a top 3 broker, and you need to convince people at the table that don't understand parametric what it is and they should be promoting this. How do you go about explaining to insurance professionals that have limited or no exposure to parametric what parametric is?
Sure. Parametric is the simplest form of insurance and bank. It is a contract with a predetermined set of triggers. What I mean by triggers are things that will allow for a level of indemnity to be set with an event. Now that sounds very wordy and very insurance. I'll break it down to the simplest term. It is, if an event happens, depending on the severity of that event. So in the sake of an earthquake, let's say, the peak ground acceleration, the measurement, how much the ground is shaking, is displayed. And that is typically done on an escalating payout, whether in bands by magnitude or higher. And those things are shared openly and honestly. And then an independent third party validates that. At least in our, there's some that don't do that, but I highly recommend that. An independent third party evaluates that with something called an event. And let's say the client purchased $1 million in limit. That then has a scale that, again, based on the intensity of that event, they'll set that level of available indemnity. And there is no deductible. There are very limited exclusions. For us, it's if it was strictly due to nuclear radiation, if you're lying to us, or if you manipulate a situation, whether it be manipulating the weather.
Which is like an almost impossible to do, but
what I would
theoretically.
Yep. So if those things are non-existent, you then fill out a simple proof of loss, because it is an indemnity, not a derivative. It would be a derivative if you weren't being indemnified. And that would be a big no-no. Which you can buy those, but then the losses are taxed. So this very simple contract, and sold on an annual aggregate, you can pay quickly. So it's as little as 2 weeks, a week. It just depends.
So that people can understand this, let's see how I do, Mark, here, simplifying it even further. Life insurance, as we all know it, is probably the simplest form of parametric.
Well,
Like life insurance, the trigger is the named insured dies. So if they're living, there's no payout. When they die, there's a payout. Pretty simple. And in the contract, there is some language around taking your own life. There's usually a time period there associated. So there is some language here, but it is as simple as you brought up earthquake. The ground shaken just needs to exceed, let's make it simple, Mark, one threshold. The ground shaken just needs to exceed some intensity. The wind speed for a hurricane just needs to exceed some speed, right? The flood depth, the flood just needs to have a depth of something, some amount at some place, transparent, open to all, and in the best cases, devoid of ambiguity around what actually happened here.
correct.
How did I do?
Correct. You did great. You did great. And one thing I would add is we've implemented multiple triggers and broker policies. Software is an a la carte menu because we don't know what a client wants or what they're comfortable with. And with that, we recently acquired Flood Flash, which has now been FCA approved. And they're a center-based parametric provider that does flood depth. They do it with these little devices that they put on the side of a home or a building. And then there's available payout. In the UK, they actually don't even have to have a loss because the regulator approved it there. But in the United States, we certainly would. But this is, I think, the future. It's going to be satellites in combination with sensor-based technology, in combination with other available data sources, and it provides a level of clarity or reduces the complexity when it comes to claims and provides such quick liquidity. It is like when the smartphone came out. People never thought that why would I need a computer? Why would I want all of this stuff on my phone? It's the same thing with insurance, that this is technology-based insurance that, again, bridges that gap between consumers' expectation and what the reality of a storm is. And it's also better for an insurance organization. We do embedded parametric with other folks. And
I would like to get into that. I think from a customer experience standpoint, I have really strong opinions on every indemnity policy should have parametric in there. I'll explain it at that point. But let's keep digging at the parametric thing, because there are going to be people in the audience that still don't quite understand it, or, Mark, the immediate objections that pop up. A mortgage company is not going to accept it, right? One objection. Another would be, man, with the ease of everything that you described, Mark, God, that must be expensive. Like, why would I even buy that? I'd like to go into some of those objections, right? So let's talk about, for one thing, yeah, it's probably true that a typical mortgage type relationship, lender relationship, is still there. They are still embedded in the indemnity world. So the parametric is not going to potentially solve all problems. Am I right there?
you have to think about, who are you buying this? Traditional policy, most of the time you're buying it because the bank required it. So you're really buying it from the bank. You're buying whatever limit that they set out, but the deductible's on you. And that deductible can be very big. And then additionally, bank doesn't care about your landscaping. The bank doesn't care about your seawall. It's not part of the mortgage.
Right.
The bank doesn't care about your dock. Parametric is for you. You're buying it for the exposures that you have. And those things, I think, are critical. Further, we are seeing better banks accept it. And in some instances, there's nothing else available. I would say that if you're going to try to insure your fish restaurant in a wood frame building in the Bahamas, you're probably not going to have many options outside parametric, but you certainly will have options with us. That's one of the things that we've seen, is either it's a lack of availability, or it's a high net worth individual who says, what am I buying insurance for? I have no lender. I'm going to have all of the loss within my retention likely. And then they find out about parametric and they're very intrigued and they like it. It is true that the rate online somewhat higher. But when you look at the payout and the fact that there's no deductible, that's when it becomes a much more intelligent choice.
Yeah. Here's an example, Mark, from Hurricane Ian. I spoke to a private client broker. I'm on the other side of the island. Mark's in Miami. I'm over in Naples. Private client broker here in Naples who had affluent customer base, has an affluent customer. Ian hits. This person's paying 6 figures in premium for their homeowner's insurance, has a 6 figure deductible, has a 6 figure loss, and literally got paid nothing for this. And the broker heard them say, why am I even buying insurance? Now, the broker is stressed out because the broker, it's more than just a transaction. It's, I don't want this person to self-insure. So right away, like Parametric is an amazing solution for that person because it solved it would solve all of those things. It's within the deductible and the payout would be without deductible. So the payout's quick. And that's the one thing I like about this, Mark, is because of the simplicity, you feel as though, unlike with an indemnity product, you're getting your money's worth. Like all it has to do is trip the trigger, the wind speed, which in Ian it would have. It hits the trigger. There's a payout. You feel listen, we're humans. We buy and we operate under emotions and feelings. And that's one of I think the drawbacks of insurance, especially in cat prone areas, is you have a lot of buyers who are like, I don't even know if I'm ever going to use this thing. In Parametric, it's the opposite. It's almost like Mark, with NormanMax, you want it to work. That's the whole point. And it's the value add is like, we've priced this thing to work kind of thing.
First residential customer, the first home that we wrote in Florida, because it took a little while to get the residential piece approved by Lloyd's. We were very thankful when it did, was for an insurance agent. He had just purchased within a 2-week window, Milton happened. He then had the experience having the claim, getting paid. And now he's our largest residential producer because he can say firsthand what
Yeah.
and he's out there selling Parametric and doing some really amazing things in that area. But that's the thing. Until you sometimes firsthand experience something, it's very difficult to communicate about it. And I think that's part of what Parametric suffers from, is there are a lot of people in our industry, good companies, that say, I don't want to be first. I don't want to be second. I don't want to be third. I'll be fourth. And what's happened is creativity gets stifled. People don't understand. They want to wait and wait. And that's not how to address things now. The world is moving so much faster. Artificial intelligence has enabled so many things. And people are much more trusting and transparent. And that's one of the things that I love about Parametric. When someone gets our policy, it says the payout tables, who's doing the calculation, how it works, and it's all laid out very simple. And that's something I really like about Parametric. And even more so in the reinsurance realm, because reinsurance is one of those things where often you have to lawyer up before you're even going to get a payment. And it's very difficult sometimes. It's very difficult to recover. It's very ambiguous. My experience with reinsurance claims with Parametric is phenomenal. My largest loss was $12.5 million on the Parametric side, which 100% covered my...
How quickly? For that specific claim, how quickly were you paid?
I was paid within a 2-month window. And which is...
So, Mark, like this is like, to me, like we talked about the deductible, we talked about the retention. I think that is a natural use case for Parametric. It just makes so much sense, especially in cat prone areas where you...
Once is we had difficulty filling out some of the paperwork because we were so unfamiliar with how this works.
Yeah.
Is this really all you got to do? And then
Yeah.
everybody's sitting there at a table saying, yeah, I think that's all you got to do. You really just got to fill this form out. We don't need to have a lawyer review it. No, we can probably just fill it up. And sure enough, that's all you had to do. And that's great. And that's why I'm very passionate about this. And I love going out there telling you, because I've actually experienced it both as a buyer, as a claimant, and now as someone who provides it. And I've seen every side of this. It does work. It is
that 2-month window. So let's use that 2-month window and let's take something that is time sensitive, which I think might be one of the best use cases for Parametric, which is business interruption on the commercial side. Listen, I'm nearly 3 decades in insurance, and I think across the board, I don't think there's a more sinister is the wrong word. There's just a more hated coverage than business interruption because the carrier hates it because they don't know if the information they're getting is adequate. And business interruption claims, especially in CAT with like industrial facilities or large commercial things, they're not easy to adjust. So
business interruption's hard. Then you get into the world of contingent business interruption.
okay, let's do both of those. Let's do both because I think both of these are serious use cases that the audience should take into consideration. So I remember I had a friend who's a forensic accountant that after Hurricane Maria went down to Puerto Rico and was helping to do a BI claim for a pharmaceutical company. So the carrier hates it. The broker's in between. So the broker's just like passing paperwork along. They don't want to get involved. And of course, the policyholder hates it because one, they always fill out the worksheet incorrectly. Number two, they are also concerned, like, when this thing happens, am I actually going to get paid anything? So it's a mess. My forensic accountant told me that it took a year to help them adjudicate a BI claim for a pharmaceutical company. And he told me they ended up paying more to adjust the claim than they did to pay out the claim. Like, it was ridiculous. Parametric, to me, because of the ease of underwriting, but more importantly, the ease of payment is, to me, Mark, it seems like a far superior solution than an indemnity-based business interruption case because, one, time-wise, a lot of companies that need business interruption don't have a year to allow it to be adjusted. Like, they need payout, and they need payout quickly because the business could go under, kind of thing. And then you talked about contingent business interruption. A client has a claim, your primary client has a claim, and now it's like, oh no, we might lose our primary client, and we have no easy mechanism to make sure that we're indemnified should something happen to them. Can you talk about BI let's put it up on a pedestal for the use case for Parametric?
As someone who comes from an underwriting background specific to construction, the amount of BI claims under a builder's risk, CAR or EAR, so construction all risk, erection all risk, or builder's risk, those are all names for project programs for first party physical damage, is massive. And then they call it the lane start. For my energy accounts, which you refer to as BI, worked on in the past. But you're right. We spent more on forensic accountants and people to count the beans than sometimes we did on the claim. And there was always a ton of dissatisfaction.
Yep.
From both people's end, because customers sometimes project unrealistic earnings, fight, or carriers were often, at least in the world that I came from, where it was like DNF style, London style business, where we were doing a portion of it, quota share. And you've got to get 10 carriers to agree, which never happens. Very difficult. With Parametric, simple proof of loss, tell us the numbers, and within reason, we take a look at it and make sure it makes sense, but it's paid quickly. And that's the idea. The idea is to want to pay that versus legal battles that I saw that are carried on sometimes 5-6 years, and it gets horrendous.
You brought it up, but Mark, to me, one of the issues with indemnity is that there's so much ambiguity in so many different areas, not just the contract language, but how much was this damaged? What's the value of this thing? These things can tend to really extend out over time. And BI just happens to be one of those claims where it's just, if it's not the simplest of events that occur, simplest of losses, there's going to be a lot of dissatisfied parties to this. And that's where, like, representation, now you're getting lawyers to come into that. And I feel like in many ways, that is part of the problem with indemnity is there's just ambiguity anywhere. disagreement on replacement costs, disagreement on coverage, disagreement on deductibles. There's just so many areas where two parties can disagree. Parametric really simplifies and eliminates a lot of the potential disagreements.
It does. And it's great at surgically isolating things too. Some people have massive BI exposures at 2 or 3 locations, and the rest of their schedule doesn't contain the same amount of need. And rather than going and purchasing huge limits across their entire portfolio, with a parametric can say, okay, it applies to these 3 locations. They're the only cat exposed ones, and they need the X amount of limit. And this will cover either the retention or lack of coverage elsewhere. Because I've had some facilities where they're super highly protected. There's not going to be a fire. Facilities, at least a conceivable event happening in that is low to none. And their real exposure is not to damage either because it's hurricane hardened. What their real exposure is to shutdown. And that's where there's no physical loss or damage at the location. The hurricane is shut down. And now they don't have any ability to recover.
Well, can I give you an example I faced in real life? So this would have been a little over 10 years ago. I was at Marsh and I was invited to Orlando to attend RIMS and a side session with Disney and their risk management team. And Disney felt as though if a hurricane came through, we're good. Like, we've engineered and architected this place. We feel like we have our exposure under control. You know what they were concerned about, Mark? Orlando International Airport. That the airport would shut down for an extended period of time and patrons could not make it. And Mark, at the time, I did not fully understand what Parametric was, but you're talking the top brokers in the world scratching their heads saying, how do we solve this for them? They want to buy something. How do we solve this? And it was not solved at the time.
I was lucky to work on the account, and I actually introduced an embedded supplement into their standard property program. And that was the first time I had done embedded. And I did that in conjunction with New Paradigm. And it was pretty groundbreaking. I was really happy to be a part of that.
That's marvelous. And then I got pulled into another use case. It was Marsh. It was the financial division out in San Francisco, and it was United Airlines. And anyone that flies out of San Francisco knows that United basically owns one of the terminals. It is their Asia hub, that terminal. And what United was worried about was that United didn't own the terminal. San Francisco International Airport owns the terminal, but United had a big lease on it. What they were worried about was not that an earthquake would damage the terminal. They had coverage for that. That was adequate. What they were worried about was the terminal would be so damaged, no hub flights from Asia could go back and forth, and they would lose that business. And there was not a clean mechanism for them to solve that contingent problem that was not directly related to their property.
Yep, but they have one of the better risk managers, a great guy. So I can see why he was thinking that forward ahead. Parametric's great for that. Parametric isn't to manage risk that otherwise can't be transferred, and no physical damage at a location, but still having a major economic impact, something that a lot of organizations have. And especially when we start dissecting supply chain. The cruise industry is a great example. Their supply chain is being able to hop around to these various islands. Think about it. If somebody rolls to a particular island, destroys the infrastructure on the island, the cruise ship isn't going to be able to go there because you have to have water and the ability to have septic or whatever it might be.
Yeah.
That they utilize. And if that's gone, there's health hazards and issues. They can't go to that port of call and now had an economic impact because it might have extra expense, booking somewhere else, the additional fuel, all of that. That can be transferred via Parametric because it doesn't have to be your location that experiences physical loss or damage, which is true of most property policies in the insurance industry. This is expanded and it allows you to transfer pure economic risk. And that's where, again, I go back to thoughtful brokers are having those discussions with their clients and saying, hey, you've got supply chain risk. You may have a port in a earthquake exposed zone or hurricane exposed zone that you're dependent upon, or the Baltimore Bridge, another great example.
Yeah.
That wasn't due to a natural disaster, but certainly damaged infrastructure from ship collision could be a future parametric product. And that's where any problem, if dissected properly, and there is a index available, can essentially be turned into a parametric. And it's so fascinating to me because we're barely at the beginning of parametric.
Yeah. I think we've hit an inflection point, Mark, because I wish whoever marketed the term parametric, I don't know, I don't think I want them shot, but that was a horrible term. I think it confuses everybody. We have to fix that term. But Mark, I'd like to end this session by talking about the future of insurance. My stance has been in the next 10 years, you will see parametric ubiquitously embedded in indemnity. And I think for carriers who are, like you said, some people don't want to be first, they don't want to be second, they don't want to be third, they want to be fourth. To me, this is an easy one to potentially understand. And I don't want carriers to fall too far behind, but there's something to be said about the customer experience, and there's something to be said about insurance is at an all-time low in trust, right? And the beauty of parametric, and especially when it's embedded with indemnity, is people want to feel as though they're getting value, right? And I envision a future. Let's take a simple homeowners policy in Florida where you have, let's say, the hurricane deductibles, the 5 or 10% deductibles go out to perpetuity, right? Like they just part of the landscape for insurance. People are going to wonder, like, what am I paying for? What am I paying all of this premium? Even $1,000 parametric trigger embedded into an indemnity product would do so much to cure the conflict, the distrust. It would make a homeowner feel as though, okay, they were there for me. I did suffer some economic discomfort. Gas prices are higher. I couldn't get from here to here. The shelves were all empty. I had to go 10 miles to go get toilet paper, kind of thing. Mark, let's finish this off by laying out your vision, the future of parametric and parametric embedded with indemnity. How are you and how is NormanMax thinking of this?
So first off, I liked your comment about parametric's a terrible name. I agree. I walked into being called that. But I think it's called fact-based insurance because that's what it is, based on facts. In terms of what's the future, I think first we'll see, and we're already seeing it, 'cause we've already pulled it off. I tend to liken NormanMax to the Hartford steam boiler at Parametric. We provide the rates, rules, forms, the systems, and the claim, and we go into other people's policies. And we've already done that. And we've hired Sam Broomer as our president of Embedded, who has a long history with Hartford steam boiler as well as Mission Boiler Re, not in the parametric space, but doing embedded products. And we see ourselves as symbiotic with other folks. I think the future of insurance is going to be embedded parametric. And there's 3 reasons why. First is it raises the level of customer service and de-risk carriers from an adversarial relationship with their client. And what I mean by that is when an event happens, typically a claimant sits around, waits for the adjuster. It's a long period of time. They don't have much cash on hand. Americans and their savings have very little. And now they're looking at this huge deductible and saying, what do I do? What's going to go on? How long is it going to take the insurance organization? And that's when people get third-party adjusters. And that's when things go bad. For the carriers that provide parametric, it's a much different experience. It is the carrier getting a notice, hey, these policies all trigger. And this is the level of indemnity available for that client. Please reach out to those insureds and let them know that there is cash available for them, whether they want it Venmo or wire, whatever way the carrier chooses, get them that money quickly. And that is a completely different situation. And then the client, because they're required to have a simple proof of loss, is now giving that carrier information such as photos, information about exactly what was done, what the conditions are, if they have access to the building, if they don't have access to the building, etc. And now the carrier has better information on hand and can prioritize their resources to deliver even better customer service. Because for the traditional indemnity piece, they're going to want to get people out there. But guess what? Now they know that there's flooding and maybe they get a porting dam, maybe they get whatever it might be. They can make better decisions because they got reality on the ground and people are getting money. And those people likely might spend that on things to prevent further damage and those claims eroding and becoming even worse over time. So I think that's number one. I think number two is Parametric right now is flirting with things beyond natural disasters. I think natural disasters is huge and more will get transferred in that space. But I see a world where other things become part of that. And we're already seeing it with cyber. We did it with terrorism, which is really interesting. We didn't do it on NormanMax people, with someone else doing it. But it is, if a terrorist event happens with a defined radius of your location and you experience loss of revenue year over year, from that closure, you get a payout. And that's your indemnity. And Boston Marathon is really a good example of that, where the bomb went off and it didn't cause physical loss or damage. Those businesses were closed for weeks.
Yeah.
And there was a major amount of economic loss. And this product responded in that manner. I think that's something that you're going to see. And then the third thing that I think you'll see is a more intelligent conversation about supply chain risks that really hasn't happened. We as an industry are doing a very poor job de-risking the world economy from things like political violence, strikes, and riots. And that is an area of unique concern for myself. And I believe the future of insurance will be much better off if we address systemic risks that the world is facing. And I think Parametric is the way to.
Awesome way to end this. Mark Groenheide, thank you so much. Appreciate what you're doing, and let's see that inflection point, and let's see if fact-based insurance sticks. Let's try it.
Thanks, Nick. I really appreciate you having me. A huge fan. It's an honor to be here.
Thank you, Mark.